Hey, hello everyone. Welcome to job order costing. Like what I said in the previous video, we'll talk about this one. I'll give a backgrounder on job order costing, and I have prepared a um, long problem for you to answer, and I'll upload a video for that for you to be able to practice job order costing. So let's proceed. So what is job order costing? So job order costing, production costs are accumulated for each separate job. A job is the output identified to fill a certain customer order or to replenish an item of stock on hand. So more or less, job order costing also refers to um, costing of specific items. So this is lower in quantity. So these are usually irregular items. These are not usually done on a regular basis, unlike product costing. So what you need for job order costing is a job order cost sheet wherein the details of the jobs are written as to the cost of direct material, direct labor, and overhead charged to each job. Okay, so it's very specific. So there's a job order number that you are referring to, specific customer where you're producing that specific product for. So what is the rationale supporting the use of process costing instead of job order costing for product costing purposes? The type of cost accumulation method used by a company will be determined by the type of manufacturing operations performed. A manufacturing company should use process cost accumulation for product costing purposes when like units are continually mass produced. That was what I was referring to earlier. When custom-made or unique goods are produced, job order costing would be more appropriate. Process costing is often used in industries such as chemicals, food processing, oil, mining, rubber, and electrical appliances, with a continuous mass production of like units. The center of attention is the individual process or usually a department. And for some other industries as well, they use or consider job order costing because although they make more or less they have same products, but they are producing those type of products only in smaller quantities and or only on a per job basis. Okay, so there are 8 types of accounting entries in job order costing that you need to consider, and we will talk about this one in detail. So for materials purchased, factory labor overhead cost incurred, factory overhead costs incurred, material used, factory labor cost distributed, estimated factory overhead applied, jobs completed, and products sold. So more or less, as we go on further about this topic, you will see that this is more likely like similar to the normal flow of manufacturing processes, and more or less the differences would lie under the uh, under the factory overhead part. Okay. So what is the primary objective in job order costing? So the primary objective in job order costing is to determine the cost of materials, labor, and factory overhead used to produce a specific order or contract. Cost estimates are made when the order is taken, and the job order procedures are designed to reveal costs as the order goes through production, thereby giving an opportunity to control costs. Okay, so again, like what we've said in the previous video, a job order costing means a lot of detail, so this is um, very tedious. So let's look into how the accounting side of it works. So for materials purchased and used, so of course, if you purchase a raw material on account, you just debit the raw material, you credit accounts payable or cash for that matter. And when you use it, if for direct material, you just debit work in process and credit raw materials. So again, this is very similar to what I've explained in the previous video before this one. And if you are using the raw material for indirect use, you just debit factory overhead control and you credit raw materials. So how about factory labor overhead cost incurred and if it's being distributed? So again, when you are incurring it, you debit payroll and you credit accrued payroll. And if you pay that one up, you just debit accrued payroll and you credit cash. So as to the distribution of the payroll account, so that, I mean, more or less the proper term would be the reclassification of the payroll account to the specific to where it should be distributed to. More or less, it would be either distributed in two factors, either in work in process or factory overhead control. For direct labor, you will put it under work in process. For indirect labor, you put it under factory overhead control. Okay. So how about the accounting for factory overhead? So there are two things that you will bear in mind for factory overhead. You will be computing it in actual overhead and the predetermined overhead. Okay. Actual overhead are the actual expense accounts or the actual, like what I said, the term it says it all. Actual expenses that you incur for this specific job. So you just debit factory overhead control and you credit expense account. Okay, for indirect labor, you just debit factory overhead and you credit payroll. For depreciation, you just debit factory overhead control and you credit depreciation, accumulated depreciation or prepaid insurance if it's a prepaid account. So that's why it's an or asset account for prepaid accounts. And for expenses, other expenses would be rent. Okay, because again, when you incur something, you first record it as is. So rent expense, you debit as is, and you just reclassify it to factory overhead because you need to distribute or reclassify which one is for sales, for admin, and which one is for factory overhead. Okay, but you can also predeterminedly assign an overhead. How do you do that? You do that by simply debiting your work in process and crediting the term applied factory overhead. Applied factory overhead can be computed using predetermined rates. These are usually, as we go on further, this can be computed in terms of labor hours, machine hours. Usually those are the two things that helps us compute the factory overhead. So these are standard costs. Okay, but that does not necessarily mean that that is the only factory overhead that we're going to compute. That is why right here, okay, for a while. So that's why right here in this one, we record actual overhead, because as we compute the predetermined ones, it would be either the applied factory overhead, we need to close this one up against the factory overhead control, okay, because we need to check whether we have over applied or under applied factory overhead. Okay, so you debit to close the applied factory overhead, you debit applied factory overhead and you credit factory overhead control. In general, if there is a small variance only of under application or over application, you debit or credit cost of goods sold. Okay, so as we go further, there is a specific topic on how we are going to account for under application or over application balances for factory overhead, but as of now, in general, you may close it under cost of goods sold as long as there is a small variance only. So if ever this is a under application, you just debit cost of goods sold and you credit factory overhead, because that means whatever you applied for here in standard form, meaning this is under, or in Bisaya, this is kulang. So you need to add further up, uh, what is lacking. I'm not sure if I got it right. Okay, anyways, I mean, no, this is actually over application. This is not under application. Uh, yeah, this is under application. I'm so sorry. So let's proceed. So how about for accounting for jobs completed and products? So previously we have already recorded the over and under application. So you debit accounts receivable if it's on account and credit sales, but of course if it's cash, you credit cash. So how do you reclassify it from work? How about if a specific job is uh, immediately shipped out? So there's no need for the work in process to go to finished goods. You can immediately reclassify it to cost of goods sold. But if it would still, but if it would be, what do you call this one? But if it would be still sourced or replenished in stock or put in your warehouse, you debit finished goods and you credit work in process first. Okay, so and after that one, if the finished goods has been officially been sold off, then that's the time you reclassify it to cost of goods sold. So distinguish between actual and applied factory overhead. Okay, so an actual factory overhead consists of the day-by-day costs that are actually experienced and incurred by the company. Applied factory overhead is the overhead charged to jobs based on the predetermined factory overhead rate. This rate is created by dividing total estimated overhead by total estimated number of units. Okay, so the number of units plays a crucial point in determining this one, or more or less also the number of hours, labor hours, or direct machine hours. It really depends on the scenario. The difference between actual and applied factory overhead is the over or under applied factory overhead.